Mike Tedeschi, Portfolio Manager over at Perspective Wealth Planning. Wrapping up the earnings season videos for the week, looking at companies reporting Friday before the bell. It's a lighter group as we have gotten through the majority of the larger names in this earnings season. But today we're going to take a look in at DraftKings, Under Armour, Goodyear Tires, and Ruth Hospitality, the steakhouse. All right, let's jump in first and foremost, and let's take a look in at DraftKings. Now, DraftKings has been in a downtrend here for quite some time, and this year it's been in a very clear downward channel as well. We have made lower highs, and we have continued to make lower lows, and actually putting in an all-time low here for DraftKings heading into earnings. Now, one of the ways that you could take a look at this would be along this route right here, where this is an entire zone of support, and this right here is an entire zone of resistance. And if that's the way that you're taking a look at this chart, I would say a move back up over that 17 zone would give you the potential to run back up towards the mid-20s. However, what the bulls really need to see happen here is to make a higher high, and the last recent high is right here at 21.5. So if we were to go ahead and make a new high at that 21.5 zone, you would have lower lows, and then you would have a higher high, and you would be in an untrending market, and you would subsequently need to then put in a higher low and continue if you wanted to switch this around. This has been an area that has been really, really beat up here for quite some time. This chart doesn't necessarily look good, but earnings is something, of course, that can change that, so we're going to pay close attention there. Under Armour, I'm going to back this chart up real quick. All right, we know that there has been a ton of choppy action here, over the last few years. No real price appreciation really since 2017. It's been trading in this big zone here, for the most part between that 12 and that 28 zone. Now, when we look at where we're currently trading at, the big kind of break last year happened right around, or 2 years ago, happened right around that 12-20 zone right in here. That's where we kind of put this potential bottom behind us and pushed higher. If we look at the way that we're trading here as of late, again, this is another one of these straight down trends here for a while, but we put in a low. This could be a potential higher low, meaning that trend could be in the process of changing. Now, again, an uptrend is defined as higher lows and higher highs. A downtrend is lower lows and lower highs. If we get into that point where we have higher lows but still have lower highs, we're kind of in a trendless market. You can kind of see this flag that's building here. So the number to really watch should be above that 18 zone, because you would take out this key high and you'd make a higher high, and you would be having lower highs in at the same time, and that would give you that potential change in trend. Bulls really want to watch to make sure that this recent low holds, but if we break underneath of the low from February or so, you would continue to have those lower lows put in place, and that downtrend would very much still be intact. Goodyear Tire, wanted to take a look in at this. Look, it's been a number of years since it's been up near those highs, and it's not fully recovered here after 2020, but it is trading at a very important key level. So if this is an area of the market that interests you, that big break happened in 2021 above that basically 11.5 zone, and that's where we got that push up. We have essentially now come all the way back and back tested this here in March, and we have put in potentially higher lows. You have another flag situation where we have higher lows and lower highs being put in play. What we really need to see is we need to see this last recent high get taken out, which is right here at 15. That would give you a potential change of character of this chart. A move underneath of that 12 zone would be a negative on this chart, and we would be looking for this support zone. And if that were to break, I mean, you've got all the way back down towards that 8 area 7 zone to watch. So really the levels very important at 15 and 12. Those are the ones that we're going to be paying very close attention to. Now, Ruths Chris is interesting. The chart itself, there's not a whole lot going on, but what I'm really interested in seeing, with inflation kicking in, food prices going up, are people still willing to go out and spend the money at a fancy steakhouse, right? We want to see what the forward guidance from this company is. I can shed a little bit of light here for us on consumer spending behavior. Now, if we look at the chart itself, we've got some important key support in at 16. The 18 to 16 zone is that major price action level. And we really need to see this get back up above, this kind of zone in here, that 26 to 27 level. We spent the majority of the last few years inside this zone, outside that washout during the coronavirus, which makes perfect sense. Nobody was going anywhere. Things were locked down, right? So Steakhouse is not exactly a good spot in 2020, but it's come back up, but it's just, once again, trading back in this major zone. One way the Bulls could try to kind of look at this is a potential kind of cup and handle, maybe. I've seen some people talking about it like that. I really just think that we have been trapped in between that 18 and 26 zone for the most part, and you can kind of ignore this portion of the chart because, again, the economy was shut down. That's not good for, a restaurant. But as soon as things opened back up, it came right back into that same range. Right? A move underneath of this 16 to 18 zone would be very bad for this chart. A move back up into that 26, 28 zone would be good. A move above that would be fantastic, targeting back up near these $34 highs from a while ago. I would not be surprised to just see this continue to chop around in the middle of this range for a while. But again, what I'm really interested in is what this company has to say in terms of forward guidance. That's going to wrap up the earnings videos for the week. We will have a full-on market recap for our Friday video tomorrow. If you have any questions, I'd love to talk anything about the overall markets with you guys. Feel free to reach out to me at mtedeschi at perspectivewealthplanning.com or give me a call at 814-580-9881. Hope you guys have yourselves a fantastic day. Take care.